All right, hello, accounting friends. We are currently working in Chapter 6, which is the worksheet and adjusting entries for a service business. And we are done with Lesson 1, where we actually created a worksheet. And we're moving on to Lesson 2, which is planning the adjusting entries on a worksheet. So one of the things we want to keep in mind is that as we've been going along here, in accounting, whenever we are buying supplies or prepaid insurance, when we do that, we are creating a transaction to increase the value of those assets every time we purchase them. But the reality is, at the end of an accounting cycle, we more than likely have used up some of those resources, and we need to put some entries on our worksheet to reflect the fact that we've started using up some of those resources or some of the materials in those accounts. And one of the things that you want to be paying attention to is that, in particular, prepaid expenses. If you prepay for a year's worth of expenses in January, once you get to the end of the month in January, you have to create some kind of adjustment in your books to reflect the fact that you've used up 1 month's worth of those expenses. And that's what adjusting entries do on your worksheet. Now, I'm going to direct you to your book, if you have it, to page 163, where we talk about the concept of matching expenses with revenue. And this is applied when revenue from business activities and expenses associated with earning the revenue are recorded in the same time period. Okay, and this is actually one of those generally accepted accounting principles, or GAAP, G-A-A-P, and this is called accrual basis accounting. And so you want to just make sure that you understand that that would be accrual basis accounting, okay, and that would be what we've got going on with these prepaid expenses. So what are the lessons for Lesson 2? The learning objectives. To analyze and explain adjustments for supplies and prepaid insurance, and then to complete the adjustment columns of our worksheet. So first of all, there's a lot of information here. Any cash that's paid for an expense in one fiscal period that is not used until later is called prepaid. So if I purchase a year's worth of insurance, it's prepaid insurance, and then I'm using it month by month. Okay, so reporting income when it is earned and the expenses when they're incurred is called accrual basis. And GAAP requires the use of accrual basis accounting. Reporting income when cash is received and expenses when cash is paid out. This is called cash basis accounting. And we are not going to be doing cash basis. We're doing accrual basis. Changes that are recorded on a worksheet to update the general ledger accounts at the end of any fiscal period, these are called adjustments, and we're going to be focusing on how we can post or record these adjustments on our worksheet. So let's look at supplies. If we have supplies, whoops, did I go too fast? So we have a supplies expense and then supplies. Before we do any adjustments, if we look at our January 31st balance in our supplies accounts, it's $620, which means we went out and purchased supplies and we put a debit balance of supplies in our supplies account. After we post an adjustment, we would say we have $530 worth of supplies that we have used. So we have a supplies expense of $530, and we adjust our supplies account by $530 so that the new balance in our supplies account is only $90. This represents that we actually used $530 worth of supplies this month, and that would be our expense. Now, one of the things that you want to consider is the T account for supplies and supply expenses, and that's what we're looking at right here. And we would need to be asking some questions to make sure that we post this the right way. Okay, and we're looking at, first of all, what is the balance of the account that needs to be adjusted? Okay, that's the $620 that we see in the debit spot. And what balance what should the balance be for the account when we're all done? $90, okay? And what must be done to correct the amount? Now you're seeing that we're going to debit the supplies expense and we're going to credit supplies so that we can total out. Now, when I look at how we posted this adjustment on our worksheet, we always include this little letter A right here, okay? And this indicates we are posting an adjustment, and that those stand out for us then on our worksheet, okay? Now, we're going to do the exact same thing and look at what's going on with insurance, okay? Now, when we look at insurance, before we do any adjustment, we have a prepaid insurance balance in our account of prepaid insurance account of $900. Now, a month goes by and we have used $150 of our insurance premium. Okay, so after we post the adjustment is $150. Now you can see that the new balance in my prepaid insurance account is $750. It's the $900 less the $150 to come up with a new balance of $750. And we do this because we prepaid for insurance $900 in January, but it's costing us $150 per month. So we need to record the fact that we've used up or we've had an insurance expense of $150. Okay, and you can see what do we do on the worksheet? We write the debit amount in the adjustments debit column on the line with the account title insurance expense, $150. And then we go ahead and credit that same amount to the prepaid insurance account. Because remember, our debits and our credits must be equal. Label the two parts of this guy B, okay, so that it stands out that we have made an adjustment. Okay, so proving the adjustment columns in a worksheet. And you can see what we did to prove is simply to total up just like we did when we proved our trial balance. So we did that single line right here at the end of our columns. And we totaled up everything in the debit column. We totaled up everything in the credit column. And then we double ruled at the bottom after we received our total of $680. Okay. All right, so how does this concept of matching expenses with revenue relate to adjustments? How do we make those two things match up? And then also the 4 questions that we would want to ask when we're analyzing adjustments on a worksheet. So you would really, this is where you look at the T accounts and you consider what is the balance in the account that we need to adjust, what should the balance be, and then what should we be doing to correct the account. So we're going to always debit something and credit something else. And remember that we would be debiting the expense account because we want to increase the amount of our expense. Okay, at this point you need to go out and do the forms for this particular lesson. Also, I wanted to make sure and at least draw your attention to the middle of lesson 6-2 in your book is when you have the pages that actually show you in much more detail what's going on with the preparing a worksheet where you're looking at the trial balance and then you're looking at the adjustments that they're reporting in the book. They also go on to give the balance sheet and the income statement information, and that's on page E, F, and G of those pages in your book. And if you're looking in your book, you know what I'm talking about. Just know that the rest of this particular chapter will get to the income statement and balance sheet information. So that information is coming. Don't tear them out and don't write on them, but you definitely want to pay attention to the information on them. Good luck, everyone.